Hey everyone, in this video I'm going to highlight 3 things about Tesla stock that I think every Tesla stock investor should know.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
I'm going to start with number 1, the falling gross profit margins. I have here a chart of Tesla's gross profit margin going back till 2014, and what you'll notice is its gross profit margin was in steady decline until 2020 when its profit margins boomed due to the pandemic. Now, why did that happen? Well, mainly because rivals like Ford and GM and Toyota and Honda faced significant supply chain constraints, which decreased the production of traditional internal combustion engine cars. And so consumers looking for vehicles to purchase were left with limited choices, and that favored Tesla for the most part. It was able to sell more of its vehicles at full price and benefit from those factors during the pandemic. But that trend has reversed now. Supply has increased, supply chain constraints are easing, and traditional internal combustion producers have been able to increase supply because of easing supply chain constraints. On top of that, there's been a slew of new electric vehicle companies that are increasing supply of EVs to the market. Rivian, Lucid, NIO, and others have all increased supply of EVs. So there's just more supply on the market, and demand is not as strong as it was in 2021 and 2020 and 2022 when consumers had a lot more money from government stimulus paychecks and lower interest rates. So now the macroeconomic factors are working against Tesla, and Tesla's had to, or not had to, but chose to cut prices significantly. I have here that Tesla's been cutting prices throughout 2023, and the lower prices could cost the company up to $1.2 billion a year, according to at least one investor. Now, Tesla's cars are more affordable and more approachable for many vehicle buyers because of the price cuts, but that's coming at the expense of Tesla's profitability and gross profit margins down to 17.89%. Now, Tesla could be doing this in part to gain market share and increase its own market share in the middle of an industry that's expected to grow massively over the years. On the left-hand side here, I have a forecasted global passenger EV fleet in the millions of vehicles. This is expected to grow from 11 million in 2021 all the way up to possibly 1 billion EVs on the road by the year 2040 in an optimistic scenario. To put that figure into context, Tesla is aiming to produce and sell about 1.8 million vehicles in 2023. So imagine the industry growing substantially between now and 2040. Tesla wants to be a part of that growth, a meaningful part of that growth, and it seems like they're willing to sacrifice near-term profit margins in order to gain greater market share, in order to benefit more strongly from the growth of that industry over the long term. It remains to be seen how effective this strategy will be, but for now, it's impacting Tesla's gross profit margins, and this is something that Tesla stock investors should definitely know. The next thing I'm going to highlight about Tesla stock that I think every Tesla stock investor should know is that it's one of the most expensive car company stocks in the market today. Now, every time I call Tesla a car company, I get a bunch of backlash in the comment section saying, well, Tesla's not a car company, Tesla's a tech company, Tesla's got chargers, Tesla's producing or working towards having driverless technology, and so it should be rated as a tech company. Okay, I'm not going to argue against that, and I never argue against that. But what I say in return, in response, is that for now, the majority of Tesla's revenue and profit is coming from car sales, right? So that's why for now I call it primarily a car company with the positive upside potential of one day maybe producing driverless cars, which would be a huge positive for Tesla stock. I've been saying that for a long time. If Tesla can achieve driverless car technology, that would be a big explosive boom for Tesla stock. But that technology is difficult for a number of reasons. First, because just developing the technology on its own is difficult, right? Just achieving the ability to offer driverless cars in itself difficult, challenging on its own. To make matters worse, you've got to get approval, regulators, licenses, cities, governments, dealing with politicians, and all of that. That makes it that much more difficult. You've seen recently GM's driverless car segment Cruise had to take off the road all of its driverless cars. There's already driverless cars on our cities in the US, but they had to be removed because of few incidents, right? When a driverless car has an incident where there's a crash and maybe somebody gets hurt, that's magnified compared to the thousands of people that die every day or every year from regular cars, right? But for a driverless car, they're put under the microscope, and so when there's an issue with them, now they had to pull back, they had to take off their cars from the road, just highlighting the point of how difficult it's going to be to get this technology and get it adopted by people worldwide. So, back to my point about Tesla being the most expensive stock when compared to car companies. I have here Tesla, Ford, GM, Stellantis, NV, and Ferrari. And you can see Tesla is by far the most expensive stock when measuring by the forward price to earnings ratio at 57.8. The only close one, Tesla is even more expensive than Ferrari, which is trading at a forward PE of 43. And Ferrari is the ultimate luxury sports brand with strong pricing power, waiting lists to purchase its cars, selling its cars at hundreds of thousands of dollars with strong profitability and excellent prospects long term. Tesla is even trading more expensively than Ferrari. And then if you look at the traditional car companies, Ford, GM, Stellantis, they're all trading at single digit forward price to earnings ratio. Tesla is more than 10 times as expensive as any of those car companies. And so while understanding that Tesla is not just a car company, it's got technology, it's got the charging, it's got various other avenues where it's going to be able to generate revenue and profitability longer term, it's still the most expensive by far when compared to its peers. Okay, and the last thing I want every Tesla stock investor to know is that the company is in an excellent balance sheet, excellent cash position. This was a challenge for Tesla for a long time. They were losing billions of dollars and they were at risk always of running out of money. They had to keep going back to investors and getting more and more money from investors. All that I think is over now. The boom during the pandemic and the stock price boom, which allowed Tesla to raise billions of dollars from investors, followed by the ability to generate billions of dollars from operations, has put the company in an excellent cash position. It has, as of September 30th, $26 billion of cash on hand. That's a massive sum for Tesla. Additionally, in its latest quarter, Tesla generated $3.3 billion in cash flow from operations. And you can go back looking at the last several quarters, $3 billion in the second quarter, $2.5 billion in the first quarter, $3.3 billion in the fourth quarter of 2022, $5.1 billion in the third quarter of 2022. The company's done an excellent job of reaching this position where it can consistently generate billions of dollars in cash flow from operations. So this part of the business is doing well. The company is not at risk of going out of business even after all of these price cuts and decreasing profit margin. It's still generating strong cash and strong profitability, strong cash flow. So even though it's not as good as before, it's still really, really good comparatively speaking. In fact, there are few EV only companies that are generating. In fact, I think Tesla is the best EV only company in terms of generating profit and cash flow. So given all of that we discussed earlier, Tesla is still ahead by a wide margin. And so yes, it deserves a premium valuation. It deserves to be more expensive than many of these other companies. My only concern was that it shouldn't be that much more expensive, right? The gap should be a little bit narrower between Tesla and its peers. Nevertheless, it's just for Tesla stock investors to realize, to understand that there exists a wide gap in valuation between Tesla and its peers. And you can see why it has a wide gap, because its performance has been so excellent. It's been generating billions and billions in cash flow. And so it can afford to be more competitive in pricing and lower to take market share. It has that luxury because it's achieved these profits, these profit margins. Okay, so those are the three things at least I think every Tesla stock investor should know. Of course, there's more about Tesla stock, and I've got a whole playlist on Tesla stock, several videos. I've been covering Tesla stock for years. You can go back and view a lot of those videos. But these are the three things I think at the very least every Tesla stock investor should know. But before I let you go, if you gained any value from this video, please subscribe to the channel. It really helps me make more videos just like this one. Thank you so much for watching.